You are listening to the Mark Guzman Podcast Experience. On this episode of Real Realtors, I have Eric Meyers and EJ Paje on the show. Now, Eric and I have known each other for close to a decade now. He's a realtor, property manager, and real estate attorney. In fact, he actually handles all of my evictions. EJ Paje is an insurance agent, and he handles residential commercial properties and also handles renter insurance and tenant liability coverages. So we'll talk a little bit more about their professions and what they do. Now, I was really excited to have them here on the episode because Eric is going to be the 2018 Contra Costa Association of Realtors president of the local association. This is his second time being the president to a local association, and he just has a ton of knowledge when it comes to real estate from his company and his involvement in the local association, and even at the state level too. EJ and we have known each other for maybe just a few months. He attended a few of our Young Professional Network events, and I've had the pleasure of getting to know him this year, and I'm proud that he's joining our Young Professionals Committee for 2018 at the Contra Costa Association of Realtors. So I hope you enjoyed this episode. Tons and tons of very valuable information for everyone. So let's get started. So we are recording now. Okay. I want to thank my guests for being on the podcast today. We have Eric Meyers with WestPro Realty and EJ Paje, insurance agent.
EJ Paje Insurance Agency, pretty much.
Perfect. Yeah. So this is another episode of Real Realtors. Basically, how the format goes is I sit down with two real estate professionals and we talk all about real estate. And let's just jump right into it. We're going to start with Eric Meyers here. And the one thing I really want to know is, how did you get started in real estate?
That's an interesting question. I'm actually a third-generation guy in real estate. My grandfather was a contractor, and then he turned into a real estate investor in retirement. And he found out that wasn't really a retirement. It was actually a full-time job, which you probably know as well, Mark, being in property management. So I actually started working in our family real estate business about the age of 5 years old. But officially, I became a broker in 2001.
Okay. And so you do mainly property. Do you do home sales also?
Yes, I do home sales by referral, but the bulk of my business is property management, and I also practice real estate law in the Bay Area.
Perfect. EJ, how did you end up in, I know you do it mainly insurance. Now you do a lot of insurance for real estate clients. So how did you end up in that insurance field and specifically insurance for real estate clients?
Sure. So just like Eric's story, I'm actually a second-generation insurance agent. So my pops has been in insurance for 30 years. Actually, at first, that was my first gig, was actually working for my dad's agency, and I just thought, hey, this is not my cup of tea. Very slow-paced, not very sexy in terms of occupation, but I went into finance. I was actually a mortgage broker for around 8 years. And I was there in the industry from 2004 to, I believe, it was 2011. So the peak and the crash. So then I had to reconsider what are alternatives. And then I looked back in insurance and thought it was definitely in line. So that's how I came right back.
Awesome.
Yeah.
So I want to talk about a few things, dive a little bit deeper into what the two of you do for business. But the one thing I do want to touch base on is that all three of us also participate with the local association. And EJ, you're actually brand new to the association as an affiliate. You're joining the Young Professionals Network for 2018. So we're really excited to have you on board. So that's awesome. Yeah. And Eric, you are the current 2017 president-elect. You will be the president in 2018. This is not your first rodeo as a president of a local association. So I want to pick your brain on what eventually got you started into organized real estate and what made you want to move up the ranks to presidency.
That's a great question. Simply put, I was asked back in 2007, which would have been 2006, I was asked by the local board of directors for the West County Association to serve. There was a vacancy on the board, and a man by the name of Carl Schober, a longtime realtor in the area, put my name forward to the group. They asked me, and I said sure, without even knowing what I was signing up for.
Kind of like how you dragged me into
exactly. Yeah. So you learn that technique in bringing folks like yourself, Mark, and EJ. We probably have done the same to you, not giving you all of the details about service, but you do put a lot into it. You put a lot of time, you put a lot of effort, a lot of brain power. But the popular misconception is that it hurts your business. It actually helps your business in a number of ways, because by volunteering and participating, you get to be alongside some of the leaders in our industry in the area. These are the folks that serve at the highest levels in organized real estate. You get to develop friendships with them. You get to follow their example of leadership and hard work and time management. And when you apply that to your life professionally, you find you can do everything. You can balance your family, your personal life, your professional life, and your volunteer life in the real estate industry all together and in harmony. And you'll find that the connections you make and the networking that you do actually enhances your business. And that's when you become hooked. You become hooked not only at the local level, you stay on the board, you eventually work your way up to being president, if you're fortunate enough to do that. And then you also become a director, say, at the state and at the national level. And that's really rewarding. Then you get to rub elbows with potentially 1.2 million realtors, a pool of 1.2 million realtors in the entire country. So it's just kind of getting over that hump. I think a lot of folks say, oh, I don't have time to do that, or oh, I don't have anything to offer, or I can't do that. That's absolutely not true. Everybody who's in this business who makes a living has something important that they can offer to the discussion at multiple levels of leadership, whether it's the committee level, the board of directors level, or at an officer level leading the organization at some point. So I always encourage everybody, give it a try. Come see what you get out of it. You'll see that you'll get things out of it you didn't even know you were missing. That's a lot of the problem with it. I think that a lot of people don't step up. But I've been into this is about my 10th, almost 11th year of service. I'm going to be president a second time, as you pointed out, Mark. I'm really excited about it. You're going to be on our board. EJ next to me is going to be on our YPN committee. You all are part of a great team, and we're going to do some great things next year.
Yeah, we are. So you said something very important, that it actually helps your business. And I have to say that's 100% true, because that's one of the reasons why I got involved. I mean, back in 2000, I believe it was 2010 or 11, you talked to me about starting the West Contra Costa YPN chapter. We did that for a few years. West merged with Contra Costa Association. And then I jumped back into being the YPN chair in 2016 and 17. And the amount of information that you get from the association, and of course, the higher you go up into the organization, the more information you get. What's helped me is being able to take that info and then educate the client, because when they're interviewing other people and they're asking questions and you're able to answer questions and even tell them what's going on with the market, the trends, what's going on with Senate Bill number 3 and how important it is that we vote next year in 2018 for it, because it's going to be $1 billion to help out veterans. All of a sudden you start talking about all this stuff, and they just take a step back and they're like, you're a true professional.
Right.
Yeah. And you win listening presentations even before you even walk in the door.
Right.
It's awesome.
Yeah. And really, Mark, to be in this business, it's not just about a paycheck. You'll never make it in the real estate business unless you have passion and you love what you do and love working with people. And this goes along with that.
Now, EJ, you're starting with YPN 2018. At what point did you say, let me get involved with this group?
Actually, I was tapped by Mike Berdales, and he felt I had some value and some resources that can definitely enhance the organization. So I gave it some thought, and I said, hey, definitely up for a challenge and something new. I'm a part of a few different organizations, and it's in real estate parallel, more in commercial lines, but thought, hey, this should be in line with what I'm doing now. Residential is pretty much the same as commercial. and I could definitely pass on some resources and pass on some of the things that can help benefit my area. I'm from Contra, Costa, so thought, hey, give something back to the community.
And you said you came from Brentwood today. How was the traffic?
Actually, not as bad as I normally drive through in the morning. Sometimes it takes me about an hour and 15 minutes just to get to Walnut Creek, and it's terrible. And actually, it took me today 35 minutes to get from Brentwood to here, so pretty amazed.
Nice.
Yeah.
Now, insurance.
Yep.
The one question I get all the time as a property manager is, what's the difference between normal homeowner policy and a landlord policy?
Sure. So a landlord policy, mainly you own a piece of property to generate revenue, income. And what you're differentiating versus a owner occupied to a rental or landlord policy is your loss of rents. So if you have a structure that is generating revenue and that structure is no longer inhabitable, how are you going to pay the bills? How are you going to generate that income? So it's important to know and realize what your coverages are, because at the end of the day, your coverages are what they are at the point of loss. There's no going back. There's no changing coverages.
Okay, so I also want to ask you one thing with landlord policy coverages, because right now I'm testing out certain lock boxes, one through a company called Rently.com, and then another one through Codebox. And what they are, they're automated self-showing. So if a tenant or prospective renter wants to see a property, they can go up to the box, they go through the app, they verify their info like a driver license and a valid credit card, and they get verified within maybe 30 seconds. They get a lockbox code, they enter the property, and then they leave and lock up. And the actual code box has like a key weight inside, and it'll identify when the key's not replaced, and will actually notify them, hey, you left it, or you have the key, go back, replace the key, otherwise we're going to charge you a rekey fee. Now, it's a really neat system. People can go on their own time to actually look at properties. The biggest question from owners when I'm pitching them, hey, do you want to try out these lock boxes, is, well, what if someone goes into my property and steals my appliances? Does a landlord policy cover that?
Yes and no, because at the end of the day, you can customize. It's kind of like a la carte, what coverages are within the policy and what limits. So really, when it comes to landlord policies, there's not a one-size-fits-all. Some carriers have different limits compared to others, and just like anything else, there's like a good, better, best, just like a vehicle, I should say. There's a base model, middle model, top of the line. You really have to understand what options are available, because if you don't know, it could be too late.
Okay, so owners should contact their insurance person.
Exactly.
And then find out if their landlord policy covers that.
Yes, so within a landlord coverage policy form itself, you want to understand what's covered, and what I call it is more of a comprehensive review. It's just like reviewing your trust, your bank accounts, making sure everything matches up. You want to make sure your coverages are in line. And I would say at least review it every year, because things change every year. The cost of reconstructing that structure goes up, and inflation. If there was a fire, just like recently in Sonoma, Santa Rosa, you want to know exactly what you're covered for, and you don't want to wait until it's too late.
Okay. Now, one thing that I know, Eric, you're aware of this, being involved in an association, is flood and earthquake insurance, and the battles that we've had over the years of trying to get this, functioning correctly for many homeowners. I mean, there's people, when they redraw the maps, all of a sudden they fall into a flood zone when their property has probably never flooded for 100 years. And now they're faced with having to get flood insurance, and based on the policy, location, whatever, they're being charged anywhere from $5,000 to $15,000 extra per year just for this insurance. So what are some of the things that, in your opinion, need to be done in order for us to fix that problem?
Is that a question for me, Mark?
Question for both of you.
Even though I'm not the insurance guy, EJ, why don't you take it first? What do you think should be done in those
Sure.
areas?
I mean, I could give you a little bit of insight. I mean, I'm dealing with this day in, day out, and I've actually seen those exact things that you mentioned recently. So what I can tell you is most of us have a mortgage. Most of us are borrowing money. So naturally, that lender wants to protect their investment. So if there is a remapping of FEMA flood lines, there's a reason. And at the end of the day, the lender wants to protect that asset, so they're going to pass on that cost to you. So quick example, have a client here in Vallejo, so pretty close, was never really known to flood. Most homeowners don't have any flood insurance over there. She all of a sudden gets a letter requiring to add flood insurance by the lender. And there's really no choice because of that FEMA remap. So at the end of the day, if you have a loan, the lender wants to make sure that their asset's insured until you pay off that home. So if you have no mortgage, then you have options. But if you have that mortgage, you just got to adhere to what the requirements are. And quick little tidbit, flood insurance primarily is actually through FEMA, which is, again, government policy or government-backed policy. So there's a fund. But there's also private carriers. They're a little bit more cost-effective, but, you know, when something does occur, you really have no historical data to understand if that policy will pay out during the time of need because, again, it's a private carrier. And then regarding earthquake, especially here in California, it's actually through the state of California, California Earthquake Authority. I've actually been getting a ton of calls around that, and that's backed by the state fund. But again, there is also a private carrier, which is a little bit more cost effective, but same situation. You just you have to consider the pros and the cons, and you make a decision.
Okay.
Yeah.
And if I may, I guess on the leadership end was what you started out with, Mark. I do know the National Association, in conjunction with our State Association of Realtors, has vigorously lobbied to have the National Flood Insurance Program updated. It seems like every year we have to go back to the well and twist the arms of our lawmakers to pass the bill and get the president on the president's desk to sign. But along with that, we're thinking about some revisions to the program that makes it more palatable, both to the government and to the public. And things like trying to avoid multiple claims on the same property that floods over and over again would be an example. So rest assured, those of us who do pay our dues as realtors, part of that money is going towards this issue of insurance and making sure that people, can not only get this insurance because, as EJ points out, they have no choice. It's in their loan docs. It's a covenant of their loan agreement to, if it's mapped that way, you've got to insure it, but also that it's affordable and it's reasonable and it's appropriate coverage.
Okay, now let's jump into evictions because I get a lot of questions about evictions from property owners and also by tenants. So Eric, you're an attorney. I use you for my evictions. So, I think I love the way you work when it comes down to actual legal paperwork. I mean, you do everything by the book. If there's something that you see wrong, even on our end, you say, hey, this needs to be fixed before we even move forward on anything. So I love the honesty, and you're not about, oh, yeah, let's just push this through. You're truly by the book. And I think, talking with a lot of tenants, even, they understand and really appreciate people that do things by the book, and they also understand it. Many landlords and even attorneys get a bad rap for, they get negative press for a lot of the, bad things when they have bad paperwork or just trying to push things through to scare the tenants. Mm-hmm. But when someone's doing it the right way, I've had conversations with tenants where they even appreciate it. So I wanted to jump into a few questions that I get quite a bit on evictions here. Now, what is the most common reason for evictions?
The most common reason historically, and what I still see today in my law practice, is non-payment of rent. That's typically in all jurisdictions, even the rent-controlled jurisdictions we see in the Bay Area, non-payment of rent tends to be the number one.
Would you say that's probably 70-80% of all evictions?
I would say so, and I think the reason for it is most any other dispute a landlord and tenant have, you can kind of work it out. But if a landlord has a mortgage and property taxes and insurance and repairs to pay on a property, and a tenant's not paying rent, that's sort of that's an impasse. You can't either the tenant can pay the rent or they don't. And most of the time, tenants are honest people, like most people in the public. If they can't pay their rent, they'll move. But once in a while, they won't, and so we have to go through the eviction process.
Now, what are some ways an eviction can go wrong?
Well, as you mentioned, doing things by the book. That's very important because the way evictions work is the law is really pro-tenant in this area, from the state level on down to the local jurisdictions, and that's for a reason. Every person's home is their castle, and having housing and a roof over your head is considered a fundamental right historically and under our law. So the benefit of the doubt with the entire process pretty much goes to the tenant, as it should. So if you're a landlord and you're in a situation where the tenant's violating a part of the lease, whether it's non-payment of rent or doing something with the property or damaging the property, something that you need to address, this day and age, it's really important as a landlord or property manager that you have an attorney that you have a relationship with, and that you can call that person up and have them guide you through the process from the very start. Because there's technical noticing requirements, and then there's technical requirements going through the entire process. And there are self-help books out there, but they just fall short of the mark. And particularly, we're seeing more and more rent controls and just cause ordinance protections being passed in the Bay Area. And that really puts an added responsibility on owners and property managers to do things, as you say, Mark, by the book.
Yeah, if you bought an eviction book a year ago, it's irrelevant now in the city of Richmond.
Even if you bought it yesterday, it could be irrelevant. I mean, I do internet searches and I type in rent-controlled cities in California. Richmond doesn't even show up on the list. Emeryville has some rent controls in place. People don't know. I mean, you really, unless you've got the time and the wherewithal and the ability to research all this stuff yourself, it's just more cost-effective to have a lawyer on your side who's consulting you and helping you through this process.
Yeah, and I subscribe to the City of Richmond Rent Board email updates, and it seems like every time they release the agenda, there's always one or two topics on the agenda of discussing an adoption to amend or to add to the actual ordinance. And that alone, whether it passes or not, just staying on top of it can be pretty tedious.
Absolutely.
I mean, just for anyone. And I've learned so much about even the proper way of running my own business by just using you as an attorney, because just everything I've learned. So it's, I mean, you're definitely worth it as far as pricing goes.
Yeah, it's very interesting. You'll notice too. I mean, I keep up with the regulations that are passed in Richmond too, and that's really how all these rent-controlled jurisdictions work. They pass the ordinance either at the council level, at the referendum level, petition level with the voters, and then these ordinances typically allow a rent board to then promulgate regulations to clarify or amend or add to the existing law. So you really do have to keep up with those. I found in Richmond that they'll pass one regulation, a couple of months later they'll rescind it and pass another one. So, but one of the key things I'll tell your listeners is that being in property management or owning rental property is a business, and anyone who is in that sort of activity should treat it as a business. Treat your tenant as a person on the other side of a business transaction. They may try to get friendly with you and try to cut corners and have verbal agreements and be easygoing, but at the end of the day, you're absolutely right. They'll respect you more if you treat it as a business relationship and you respect all their rights as a tenant. If you respect all their rights as a tenant, they'll respect your rights more likely than not as a landlord. And that's the kind of relationship you want to have.
I love that you said that, because I literally had a conversation with a new owner client a couple weeks ago, and the way I put it is, pretend you're Macy's, right? Or some retail store. The tenant coming in has the money. They're paying you. They're your customer. You're providing the service of housing. They're your customer buying that housing. That's what you have to, and you have to look at tenants as a customer, keep them happy. Now, that doesn't mean you let them walk over you whenever you want to, but it's just like a client comes into your clothing shop store, and are you going to let them just walk out of the door with clothes? No, you're not, right? So there's respect on both sides, but you have to treat the tenant as your customer coming in.
Yes, and that's another huge reason, Mark. I represent some small landlords. We call them mom and pops. Folks that they have one or two rentals that maybe they own or occupied early on in life. They're in retirement and they depend on the income. One of the first things I recommend to them is to hire a property manager like yourself. It's money well spent because it puts that professional middle person between them and the tenant. And if things go sideways or if the tenant doesn't pay or there's some things that need to be done, it's so much better to have a professional handling that.
Yeah.
And I always encourage people to do that.
And the one thing I found out in my career now is that even corporate clients, I mean, big landlords, they want their tenants happy. They don't want to hear the complaints from tenants saying, hey, your property manager sucks because they're yelling at me. They're calling me a lowlife and this and that. They don't want that. They don't want those problems. They understand big corporate clients want to reduce turnover rate because reducing turnover rate increases your overall return on investment. Well, how do you do that? You keep the tenants happy. It's that simple.
That's right.
So, EJ,
Yeah.
now that we're talking about evictions, the question I get all the time is, does my landlord policy cover the cost of an eviction? Is that additional coverage they can add on to it?
There are options, and you'd be surprised at what options are available depending on the carrier. So, now, again, you definitely want to check in with your insurance agent or maybe someone who is very well versed in what options are available out there, because naturally, you have your big companies that usually try to sell their own policies, so you're only available to certain limitations of what their policies offer. So with myself, I have the ability to kind of give you some options depending on what your needs are. Now, to kind of circle into that, now it's a both sides type of deal. You want to make sure you have the right kind of coverages to protect yourself from your exposures as a landlord, but you also want to protect any potential claims on your landlord policy by making sure your renter has their own renter's insurance or a policy to cover any type of damage to the premises if they were liable for it, such as obviously there's a kitchen and people cook. So if there was a fire that may have destroyed the cabinets, the stove, the hood, as a landlord, you don't want to fork up those monies because of what your tenant did. So you want to make sure that they have a policy in place, which is renter's insurance, that covers their liability for whether it's fire, smoke, water damage, if like a pipe burst interior and damage the floors. You don't want to be the landlord that pays for someone who screwed up. You want to make sure you're protected. So you want to make sure you have both sides. It's not just a landlord policy, because if you have a landlord policy, you file a claim against your own policy, well, guess what? Now your potential rate can go up next year at the renewal because you file a claim. So you protect yourself by making sure your tenant has a renter's insurance policy, so that way you can, make sure they take care of it on their end, on their policy.
So you bring up the type of renter's insurance. Through our software, I use AppFolio to manage all the properties we have, and we can ask for renter's insurance, but through the software, we have the option to also charge the tenant $10 a month for tenant liability insurance.
Gotcha.
This covers the landlord up to $100,000 for fire, water damage, sewer, anything that's caused by the tenant.
Yeah.
And it's actually a great policy. Obviously, we never really have to tap into it, right? Like any insurance policy, but it's there, it's available, and the tenant pays it.
Yeah, but actually, I'm glad you brought that up, because I noticed a lot of property managers, a lot of big names, typically use their own in-house carrier. But the thing with that is that it only covers the liability, and the tenant, the person that's living in there, whether it's themselves or with their family and kids, have everything that they've worked hard for inside of that space. So whether it be their furniture, their clothes, or electronics, or their kids' stuff, those are not insured through just a liability only policy. So the policies that I offer is a comprehensive, it's like a landlord solution. It covers, obviously, the primary thing that the property manager needs is liability, but it protects the renter with everything that they've worked hard for, everything that's valuable to them, their personal property. And
Can you find those policies for under $10 a month?
Well, I could tell you that I have something along those lines. It's pretty competitive. Last time I did the math, it was like $12, $13 around that neighborhood. But again, it's subject to the area, and with insurance, the cost is based on the exposures and the claims of that pocket of whether it's neighborhood, zip code, or city. Some cities are a lot cheaper than others, like San Francisco is a little bit more expensive because naturally there's more losses, and people claim it under the renter's insurance. And the cool thing about this is actually if you have a laptop, backpack, you're a tenant, you have that backpack in your car, someone broke into your car, I mean,
That'll be covered.
It'll be covered. So anything that was in your car that was your personal property is covered under your renter's policy.
Okay. We'll talk after the podcast because
Sure.
What you said, how the tenant liability insurance doesn't cover renters' personal items, that's exactly in bold on that additional form we have to have the tenant sign.
Sure.
It states their personal property is not covered, and that
Right.
they're still recommended to get their own renter's insurance.
Right. One thing I definitely want to add on to it, which is the third thing, which I think is definitely of value. If you're renting a space and if it's at 100% occupancy, I mean, for example, a single family residence or a townhome or condo, it could be apartment complex if it's high capacity when it comes to occupancy. If something happened to your dwelling or your living space and it's inhabitable, our policy that we offer actually gives you money for rent while your space is getting fixed. So that's another benefit. Again, most people don't think about these things until they're in that position. At that point, it's too late. So you want to make sure you know and understand what options are available to you as either a landlord or a tenant, because you want to make sure it's covered when you need it.
Okay, great.
And one of the questions I always get, Mark, is landlords ask me, well, can I require my tenant to have renter's insurance?
Yeah, I think I asked you that
Yeah,
question
I think you
about a year
did.
ago.
Yeah, and probably remember my answer is yes if it's in the original lease. But if you require it later, that would be considered an addendum to the lease. And you could probably do that in an area that's not rent controlled. But if the area is rent controlled, you would have to have the tenant's agreement to that additional requirement, because that would be considered an increase in tenant costs or an increase in their rent, if you will, that's outside the bounds of the ordinance. But I do know there are some property managers, as a matter of practice, I know who use Appfolio. I use Buildium. It's very, very similar. Mine's the East Coast version. I think Appfolio's out here on the West Coast.
Yep.
Who require it. They just, as a matter of practice, it's boilerplate in their lease. I know your lease, you have boilerplate advising them that they can. I do the same. I haven't gone to the point of requiring everyone to have it, but it is certainly, it's a new issue. And I'm glad EJ offers it too, and it's probably a good thing to do. At least advise your tenants that they have that option.
Yeah.
Yeah. I mean, a lot of these big companies, I'm sure you know who I'm talking about, without throwing any names, they require it for a lot of these apartment complexes when you're occupying or renting one of their spaces. They kind of say, hey, before we give you your key, got to get this policy in place.
Right. Yeah.
Yeah.
Okay, so let's switch it up and talk about the Bay Area housing crisis. So actually today in Mountain View, there's an event called On the Table, and they're expecting about 1,000 people to show up today to actually have debates and discuss how can they fix the housing situation in Silicon Valley. Now, this is they're specifically talking about Silicon Valley, but the entire state of California has a housing shortage crisis. I mean, at the last CAR Expo, they were talking about we're short 1.5 million units as of today for housing, which is just completely ridiculous. And so I wanted to get your take on what's caused the housing crisis and what are some possible solutions.
Well, I think Eric would probably be a better expert at that.
Sure.
Yeah.
Well, we don't have enough supply. And the reason we don't have enough supply is we don't have enough new construction. The other figure I heard, I was at the expo too with you, Mark, a few weeks ago, is that I think we need about 180,000 new units per year built in California to keep up with demand. We're at about 80 or 90,000. So it just keeps getting worse and worse and worse. And it boils down to we have a legislative environment, whether intentionally or not, in the state, and it's both sides of the aisle, that inhibits development. We need reform in CEQA. We need reform in the permitting process. We need more affordable housing in the state. And affordable housing means a lot of things, but in general, you can just say we need more housing. If we just, basic economics, if we increase the supply, things like rents will cool off, sales prices will cool off, and we won't have to have these reactionary measures, such as measures that inhibit development or NIMBYism or rent control. Right. So what the California Association of Realtors, and they've done studies and they've commissioned consultants to help them, but really their message is the regulation and the NIMBYism, kind of getting over that at the local level where you have certain folks who don't see the larger picture, that it's actually better to have smart growth and smart housing in their communities so people can live near where they work, and then have an environment that encourages development in a manner that we need in this state. And to actually say what a crisis is like that is kind of simple, but to get to the point of solving it is really, really difficult, and it's not going to be done with a silver bullet. It has to be done with policies over time.
Yeah, one of the hot topics they were talking about was everyone wants cheaper housing, more affordable housing, but the realization is, well, if so many people want to be in San Francisco, in Oakland, in Silicon Valley, in Contra, there's only so much land that can really be developed, and so the only other option is to build up. Mm-hmm. And then you get into, well, not in my backyard. And people they're okay with, having you build up, but they don't want it near them because they still want their, single family home. In fact, one of the speakers, and I can't remember her name, she was in the, you might have been there, Eric, too. I want to say she was in the Public Policy Forum, but she came out with this study that simply showed if 25% of all single family homes converted to a triplex unit, we would solve the housing crisis.
Yes.
25% of every single family house converted to a triplex solves the housing crisis. Prices drop. Everything goes back to normal.
Correct.
I mean, that's simple. You don't even have to get into the conversation of building sky-rise buildings anywhere.
And along those lines, there's been some legislation that's been advocated by CAR in terms of secondary units on properties, where really streamlining and simplifying the process statewide for folks. If you have a single-family home, building a second, what we sometimes call a granny unit, that legislation calls an accessory dwelling unit, an ADU in the back. But that's sort of the same concept. And I know a lot of the folks that I've talked to down in the San Jose and Silicon Valley area say this could be a solution to our housing crisis. If we just streamline over-the-counter permitting process for these secondary units and allow people to live in their primary residence and have the rental in the back, what it would do, and we wouldn't need to have all these rent controls. Another big issue that comes up is, we're in a changing, it's pretty obvious, but we're in a changing economy that brick and mortar retail is diminishing. More and more things are ordered online, they're delivered. And so you
look at Hilltop Mall.
Yeah.
It's dead there.
And to Richmond's credit, they're looking into redeveloping that into housing. We need more of that and more incentives to do that and more visionary ways of looking at doing that, because that's the land. And if we can convert those dated retail and commercial uses that really aren't viable and maybe even sitting vacant to housing, that could be another big solution to our crisis.
Yeah. Yeah, so it's very interesting. And then because of, and Silicon Valley, the reason why this also caught my attention on the table event is that in Silicon Valley, you have companies like Google and Facebook and Apple, and they're notorious for a lot of the benefits and perks that they give to their employees. And a few years ago, they realized how many of their employees are having to live from 1 or 2 hours away and commute into Facebook so that they can have affordable housing, even though they get paid pretty well. But there's some people that don't want to spend 50, 60, 70% of their paycheck on rent, right? So they'll commute. Now, commuting hurts their business because typically the people will get in a little bit later. They start later on in the day. So they wanted to encourage their employees to move back into Silicon Valley. So they started programs where they would pay you an incentive. So they'll give you I've seen anywhere from $1,000 to $3,000 a month stipend on top of your salary to live in Silicon Valley. And of course, when someone has that kind of additional incentive, what are they going to do? They're going to take advantage of it, and then landlords raise their prices because they can make more money off of it. And you go into some ridiculous prices of $8-9 grand a month for a 2 or 3 bedroom house in Silicon Valley.
Wow.
Yeah.
That's definitely not within reach for a majority of folks that have been there and been there originally, opposed to naturally a lot of these tech guys bringing outside talent from different places. So
yeah. And then Eric, what you mentioned as far as building an in-law unit in the back or like a granny unit, I know so many people that would love and take advantage of that in a heartbeat, because if their mortgage is $2,500 a month, $3,000 a month, they would love to rent out a back unit for $800 a month. It supplements their income and helps solve the housing crisis if enough people do it.
And I recently had a client I counseled. It doesn't even have to be a brand new unit, like say in the backyard. This is a client of mine who has a large house in Richmond with sort of 2 levels. There's some space down below with a bathroom and what could be turned into a small kitchen. So even if it's attached to the main structure, you can make it a subordinary secondary unit as long as it's got a separate entrance and you pull the proper permits to put a kitchen in and a bathroom. And that worked out very well. It was relatively inexpensive. It was an over-the-counter approval with planning. These are really streamlined now for these accessory dwelling units. But when you talk about converting a house to a triplex under current laws, in most of the jurisdictions in the state, that would be a nightmare to try to get the exceptions to the zoning and the use permits and the variances and all of that you would have to do that. But really,
and neighbors complaining about
it too. And you'll have all your neighbors showing up saying, I don't want 3 sets of families, 3 sets of cars, 3 sets of everything living next door to me in my single family neighborhood. But the law is on the books now for these secondary units, and it's really, you're absolutely right. It could be a great source of income for folks who have extra space in their home and maybe don't want to move like where they live. But it's a piece of the puzzle to solving this. It wouldn't solve it, but it's one of those things that we can do, along with a lot of other things that I could probably geek out and talk all day with you about, you and I back and forth. But we can solve this crisis. We've solved worse crises in California. There are worse crises to have, but this is a full-blown crisis, and we do really need to rally and get together with our lawmakers and other industry groups and really come up with real solutions over time that address this.
Perfect. Well, that's our time for today on the podcast. So I want to thank the two of you for coming on. This podcast goes everywhere: iTunes, Google Heart, or Google Play, iHeartRadio, all that good stuff. And so we'll go ahead in the descriptions, link up your names, contact information. So make sure to give us your website. But if someone wants to contact you for business, what's the best way to reach you? Eric, let's start with you.
Sure. Well, you can Google me, Eric Meyers Attorney or Eric Meyers Realtor, and it's ERIC, and Meyers is MEYERS, and I should pop up. WestPro Realty is my company name. I do both my property management real estate business and my law business under the same corporate entity. Or you can give me a call or a text, and you'll find that online too, but it's an easy phone number. I've had it in my family for about 70 years. It's 510-233-5000.
And EJ?
I guess I'm up. So just like everything else, you can Google. You can find everything on whatever platform you use. But it's EJ Paje Insurance Agency. I take texts. Pretty responsive when it comes to that. Calls, email. So with that, you can give me a call at 650-897-5540. It's an office with a text. And you can definitely reach me that way, or click on one of the links and see about reaching out and see if I can assist.
Great. Well, thank you for being on the show.
Thanks for having us.
Yeah. That was one hell of an episode. Tons of information from insurance side and eviction side. And so hopefully you got a lot of value out of this podcast. I want to thank my guests, Eric Meyers and EJ Paje, for being on the show. All their contact info is going to be linked up in the description. So please go follow them, hit them up. I mean, these are smart guys, smart individuals, do business the right way. I highly recommend them. Thank you to our producer, Sam Lubman, for putting together another awesome episode. Thank you for listening to the podcast. Please like, comment, and share, and do not forget to subscribe. I really, really want to thank all of you for listening. It means the world to me, and I hope today's episode provides you value in your day-to-day life. I created this podcast to help showcase the many great people that live in this world and help share some knowledge that I've learned along the way in life. Again, thank you for listening. Check out our sponsors, and I'll catch you on the next episode.